Hello everyone, this is the final update for the July the 5th news. Timestamps for each article will be in the comments section if you want to skip ahead. First off, Binance suspends 8 altcoins tied to Bridge Protocol multi-chain after May incident. Binance, the largest crypto exchange in the world, has suspended deposits and withdrawals for 8 altcoins tied to bridging platform multi-chain. In a new announcement, Binance says it's halting support for Alchemy Pay (ACH) via the BNB Smart Chain, Spell token via the Avalanche C Chain, and 6 other lower market cap altcoin projects via Ethereum and Phantom. The tokens were already suspended once in May following an incident described by Multichain as a force majeure, or an attack that left some routes on its bridge unavailable. Binance has not given specific reason for halting support for the projects, but did briefly reference the incident in its announcement. Multichain said at the time of the incident, while most of the cross-chain routes of multi-chain protocol are functioning well, some of the cross-chain routes are unavailable due to force majeure, and the time for service to resume is unknown. After service is restored, pending transactions will be credited automatically. Multichain will compensate users who are affected during this process, and the compensation plan will be announced later. Shortly following the incident, the company revealed that it couldn't locate its CEO, and there have been no updates on his whereabouts since. In the past 2 days, the multi-chain protocol has experienced multiple issues due to unforeseeable circumstances. The team has done everything possible to maintain the protocol running, but we are currently unable to contact CEO Zhao Jun and obtain the necessary server access for maintenance. Binance says the tokens will be suspended until further notice. Next, Twitter receives money transmitter licenses in 3 US states. Michigan, Missouri, and New Hampshire have granted money transmitter licenses to Twitter Payments LLC, leaving 47 US states yet to weigh in. Twitter Payments LLC, a subsidiary of Elon Musk's Twitter social network, appears to have received its first money transmitter licenses after Michigan, New Hampshire, and Missouri approved the company's applications. A money transmitter license allows a company to provide transfer services or payment instruments. This differs from a license to conduct sales in that it's meant to provide consumer protections for businesses that facilitate the transmission of money from one party to another, not just the purchase of products and services. It remains unclear at this time exactly what offerings will be on tap if and when Twitter Payments eventually rolls out. The company applied for licenses in all 50 US states, and there's no clear timeline for the approval process. Even assuming a clean sweep of approvals, Musk and CEO Linda Yaccarino have yet to offer many details. People familiar with the company's plans indicate that Twitter Payments will initially offer fiat currency transaction services, perhaps similar to those provided by Stripe, Venmo, and PayPal. In the future, the company reportedly intends to open the platform to cryptocurrency services. It's also been rumored that Twitter Payments plans to offer its own token with a project called TwitterCoin, and that the company will even unveil its own wallet. As Cointelegraph previously reported, all of this falls under Musk's promise that Twitter would do lots of dumb things. Another way of saying the company would adhere to the modern tech mantra of move fast and break stuff. Some of the changes have come across as polarizing at best. Twitter tweaked the site's rate limiter, a function that limits the number of posts a user can read in a given period, to a mere 500 posts per non-paying user. The site also recently restricted the ability to view posts to those who were logged into their Twitter accounts. This change was quietly rescinded on Wednesday, July the 5th, per reports from TechCrunch and Engadget. Next, are we back? Crypto analysts split on Bitcoin's bull run. There's no easy answer on how long Bitcoin will rally, but investors were split on their forecasts. Bitcoin may be far below the all-time high of $69,044 it touched towards the end of 2021, but much is true. It has exceeded expectations in 2023 by surging 86% since the start of the year, when it was trading for less than $17,000. The digital gold is today trading for over $30,000 per coin as institutional money floods into the market following a number of high-profile exchange-traded fund applications. The launch of a crypto exchange backed by Wall Street bigwigs and, according to some, those looking for an inflation hedge. But how long will it last? Some experts told Decrypt that investor sentiment has really changed since last year. Others said that fiat liquidity issues mean the top may already be in. Liquidity refers to a market's ability to facilitate conversion between an asset to fiat currency. When liquidity is poor, traders lose money due to events like thin order books and larger spreads, and there can also be more volatility. Crypto trader Pentoshi said on Twitter Monday that he thought a larger correction could come if Bitcoin hits the $32,500 mark. He added that this would come as late longs jump in and people begin to over leverage, meaning those opening a long contract now could be taking a big risk. Right now, traders are longing Bitcoin and paying a pretty penny to do so. Amber Data's director of derivatives, Greg Magadine, told Decrypt that traders are paying a premium for upside exposure. This is the highest level of call premium we've seen in the past 18 months, he added. But trader Alex Kruger told Decrypt that although liquidity matters, it is currently overrated by market participants. He added that Bitcoin is now largely decorrelated from TradFi, traditional finance, and that the largest digital asset by market cap had jumped 20% since the BlackRock ETF application. An SEC approval is very far from being priced in, he added. I thus believe that Bitcoin has room to continue running higher. BlackRock, which manages $9.5 trillion in assets, applied to the U.S. Securities and Exchange Commission for a spot Bitcoin exchange-traded fund 3 weeks ago. Experts said odds were in favor of the firm, which is nearly undefeated when going up against the SEC, at 575 approvals versus one that has not been approved, as nearly every single one of its ETF applications has received an approval. This led to the price of Bitcoin to spike, with big money investors taking cash out of short products and plunging them into long ones. We have seen 10 consecutive weeks of outflow from short Bitcoin products, suggesting that sentiment really has swung positive in recent weeks. CoinShares head of research James Butterfield said, "Are we back? It seems so, but the approval of a physical Bitcoin ETF is far from a done deal at this point. We are at least moving in the right direction though." While crypto trader Ryan Scott told Decrypt that the ETF buying in news is probably priced in for the most part now until an actual decision is made, adding that the Federal Reserve's decisions and macroeconomic conditions were probably now more important factors on whether Bitcoin would swing up or down. Ultimately, Bitcoin is still a risk asset and is likely, for now, to move in line with what the decisions the Federal Reserve makes. And lastly, Bitcoin mining revenue hits $184 million in Q2 amid ordinals fever. The experimental class of tokens has delivered a healthy quarterly sum to miners, analysis shows. Bitcoin miners are awash with funds from transaction fees, a multi-million-dollar windfall generated this past quarter due to the popularity of BRC-20 tokens and ordinals, according to Coinmetrics. The crypto analytics firm said that a formerly tepid fee market for Bitcoin miners has been suddenly upended with its latest State of the Network, Report finding miners earning $184 million from transaction fees from April through June. Compared to $2.4 billion in Bitcoin mining revenue overall, that figure may sound small, but the latest transaction fee total represents more than 5 preceding quarters combined. CoinMetrics said it described the shift as an exceptional change influenced by BRC-20 tokens. Launched earlier this year, Ordinals is a protocol that enables people to create NFT-like assets on Bitcoin by inscribing data to an individual Satoshi, the smallest unit of currency that a Bitcoin can be divided into, equal to 1/100 millionth of a whole Bitcoin. Even though Ordinal's arrival has been met with some pushback within the Bitcoin community, its potential has been highlighted by figures like MicroStrategy co-founder and executive chairman Michael Saylor, a prominent Bitcoin supporter who noted the protocol's new ability to help miners stay profitable over time. BRC-20 tokens were introduced in March, and the experimental class of coins takes inspiration from Ethereum's ERC-20 token standard. BRC-20 tokens have ballooned to over $240 million in market capitalization since being introduced, according to CoinGecko. In order for people to mint BRC-20 tokens and essentially claim them from a BRC-20 project that's launched, users have to submit a transaction along with a fee to have their move to mint tokens processed on Bitcoin's network and included in the next block of transactions. As a sense of mania surrounding BRC-20 tokens took hold in May, people became more willing to pay greater premiums on transactions in exchange for speed. Nick Hansen, CEO and co-founder of Luxor Technologies, told Decrypt. BRC-20s introduced this urgency because what you needed to do was get your transactions confirmed faster than other people's transactions, he said. Then you would basically win the coins from the mint. Transaction fees on Bitcoin were so high in May that some people claimed Bitcoin was under attack, and the amount of Bitcoin miners earned from transaction fees outpaced Bitcoin's block subsidy for the first time since 2017. CoinMetrics report notes that payout amounts related to transaction fees have waned as the fervor surrounding BRC-20's ebbs. Still, the amount of funds that miners are receiving from transaction fees remains robust, Hansen said, especially compared to years past. We have calmed down, but we're still seeing persistent demand for Bitcoin block space, Hansen said. Miners are still making 10 to 15 times more from their transaction fee volume than they would have last year. That is all of the news for July the 5th. All of the timestamps for each article will be in the comments section, and I will leave links there if you want to read them yourself. That's all for today, and I will see you tomorrow.